Foreclosures are coming as 1.2 million mortgages are set to renew in 2025. Will that be finally what collapses the Canadian real estate market under the weight of higher interest rates? Hey there, and welcome back to Bald Prairie Real Estate. My name is Matthew Pfeifer, real estate agent in Regina, and that is my trusted assistant, 𝗲𝗲𝗄𝗧. This is the weekly news recap where I go through what I think are the most interesting Canadian real estate related news topics, and I give you my thoughts and opinions on them, and you heard that right. 1.2 million mortgages, most of which those ultra low pandemic interest rates are set to renew in 2025. How is that going to impact the Canadian real estate market? Well, we'll be talking about that. But of course, let's start this off with another one of my terrible bad dad jokes. The other day, I was shopping for a car and the salesman said, "This car will fit 6 people without any problems." And I said to him, "I don't know 6 people without problems." If you have a terrible joke I can use in a future episode, put it in the comments below. Let's get into this week's Canadian real estate news. Let's start off talking about mortgage arrears rates from the Canadian Bankers Association. Somebody whose mortgage is in arrears is somebody who has 90 days or more on their payments. And of course, that is when you're going to start seeing foreclosures as well. So this is really good leading information as to kind of the health overall of homeowners in Canada. Let's check out the chart here. Looking at the chart here, you can see the mortgage arrears at 0.2%, still well below the pre-pandemic levels of 0.35%, which was already considered historically low, and it is continuing to trend up, but basically unchanged from last month. Now, this data set is from all the big banks and most of the monoline lenders. Doesn't include credit unions. Their data is typically pretty similar. It does not include private lenders. Their mortgage arrears rates will generally be higher, but they're a very small segment of the overall mortgage market in Canada. So after 2.5 years of rising interest rates and people having to renew into those much higher interest rates than they were paying, we've hardly seen mortgage arrears move at all, and it hasn't even caught up to the pre-pandemic ultra low levels. And I can already see somebody in the comments madly typing away, but in 2025, there's over 1 million mortgages set to renew, and they'll all be going from those ultra low rates to much higher interest rates. That's going to drive this up. Don't worry, I'm going to get to that really soon here. They call this foreshadowing. So keep watching here, we'll get into it. Looking at the provincial breakdown chart here, you can see Ontario and BC still continue to be below the national average. And I'm sure you've seen a gazillion different tweets and videos talking about how much foreclosure sales have increased in most of those provinces, yet they're still below the average. Saskatchewan still leads the country with the highest arrears rate. And I've had a lot of people ask me why that is. And maybe this is something I should do a video on in the future. The very simple answer is the foreclosure process in Saskatchewan is a very long one, giving buyers time to catch up and allowing them to stay in that arrear state longer before the foreclosure process starts. I do also expect that mortgage arrears will continue to rise through 2025, and I wouldn't be surprised if it gets higher than the pre-pandemic lows of 0.35%. But remember that people stop paying their mortgages last. So this is a very much a lagging indicator of what's going on in the economy. They'll stop paying their credit cards, their lines of credit, their auto loans first, and we've seen all of that delinquency going up significantly. It just hasn't caught up with the mortgage market yet. That I expect it will. Fast pause here. You're ready to buy a house, but you don't have a great real estate agent? Don't worry, I can handpick one for you from my great network of agents anywhere in the country. If you look in the description of this video, there's a link to my calendar where you can book me for an agent consultation, and I'm going to find you the perfect agent. Now let's get into this week's best mortgage rates. Starting off on the insured side of things, the best 3-year I could find was through Radius, 4.39, and that is unchanged. The best 5-year fixed, 4.29 through Radius, also unchanged. On the variable side of things, the best 5-year adjustable was 5% through Marathon, up a little bit from last week. And the best static variable was 5% through Manulife, unchanged. On the uninsured side of things, the best 3-year was 4.69 through TD, unchanged. The best 5-year fixed was 4.59 through Manulife, also unchanged. On the variable side of things, the best static variable, 5.40 from Scotiabank, slight drop. And the best adjustable rate was 5.45 through Merrick's, unchanged. When it comes to the big 5 banks, the best 5-year insurable fixed rates I could find, CIBC 4.34, unchanged. BMO 4.45, unchanged. TD Bank 4.49, unchanged. Scotiabank 4.69, slight drop. And RBC 4.74, unchanged. As always, mortgage rates vary by region across the country and of course by different borrowers. And I always say that the lowest mortgage rate isn't always the best mortgage available. And I had a viewer ask why that is. Now I'm working on a video to answer that question. I think it's gonna be a great one. So make sure you get subscribed so you don't miss that video when it comes out. This next article from Global News is asking, should we look at a more European model to provide affordable housing in Canada? In many European countries, it's common that 20-25% of their housing stock is being considered below market or social housing run by and built by the government. In Canada, that's closer to about 5% of the housing stock, and we haven't seen governments building housing basically since the 1990s. Now, I know recently the governments of all different levels have been promising billions of dollars to get more housing built, but generally that is in the form of loans, grants, or tax incentives to private companies to go out and build those houses. The government isn't actually building any houses themselves. Oh yeah, they did promise standardized blueprints for everybody, right?
Just for the record, I do not have the right to put the game on the...
This is a discussion I think we need to be having as a country. How involved should the government be in the housing market? Because again, right now, basically non-existent. With some of the programs at the federal level, they're promising getting buildings built, and it's going to be like $500,000 per apartment unit built. Now, I know things have gotten expensive to build in this country, but I know you can build an apartment for less than $500,000 per unit. Instead of spending billions of dollars in loans and grants and tax incentives, maybe the government should be building these units themselves. A private company is not going to build a property and rent it out below market value to then lose money. They're just not going to do that. So maybe this is where the government should be stepping in more than they are and building these. And yes, they will most likely lose money. But if as a society we have decided that this is a good thing to provide affordable housing and shelter for Canadians, it's a discussion we have to have. Next, let's go through the November rent report from rentals.ca. The average asking rent, according to rentals.ca, and again, this is asking rent, you're likely going to be paying less than what the asking rent is. It's still $2,100 a month, but it is a 1.2% year-over-year decline. That's the first time we've seen rent decline nationally since 2021. Looking at the most expensive places in Canada to rent, at number 5, Oakville, $2,300 a month. That is down 9 to 14%. Number 4, Mississauga, $2,300 a month. That's down 2 to 4%. Toronto comes in at number 3, $2,400 a month, down 9%. Burnaby at number 2, $2,400 a month, down 9%. Vancouver, the most expensive place in Canada to rent, $2,600 a month, also down 9%. Then looking at the top 5 cheapest places in Canada to rent, at number 5, Edmonton, $1,400 a month, that is up 7 to 8%. Winnipeg is number 4 at $1,400 a month, up 5 to 8%. Regina comes in at number 3, $1,300 a month, up 4 to 9%. Saskatoon comes in at number 2, $1,300 a month. That is up 13 to 17%. The largest year-over-year rent increases in Canada are in Saskatoon. And number 1, the cheapest place in Canada to rent, $1,200 a month in Fort McMurray. That's down 1 to 5%. Now let's talk about the 1.2 million mortgages set to renew in 2025. The first article I had seen with a title like this was the Toronto Star, and I wanted to use it, but that's been a paywall, so I don't want to specifically talk about that article because I want you guys to be able to go and read the articles yourself, and I didn't want to put an article up that was behind a paywall. So instead, we're going to go to the actual source material, the CMHC report itself that the Toronto Star article is referencing. The big takeaway, and it's being used in headlines all over the place, is that 1.2 million mortgages in Canada are going to be renewing in 2025. And they're inferring that, of course, people will struggle with their mortgage payments going up. They will then be forced to sell their properties or even go through foreclosure, which of course would crash the Canadian real estate market as prices collapse under the weight of higher interest rates. But this is not the first time we've seen this type of article before. Look back, 2023 here. These are written about the mortgages renewing in 2024 into higher interest rates. See the similarities in the titles? And that's why here on Bald Prairie Real Estate, I want to go beyond the headlines and give you some context because it really matters here. Do you know how many mortgages renewed in 2024? How about 2023? The answer is 2023, a little under 1 million mortgages renewed. 2024, about 1 million mortgages will renew. Why is that? Typically, Canadians take 5-year terms, and there's approximately 5 million mortgages in Canada, meaning that every year, approximately 1 million mortgages will have to renew. But I get it. Saying 1.2 million mortgages are renewing this year at higher interest rates is a really scary way of saying, hey, a normal number of mortgages are going to renew. But that's a boring headline and it doesn't get clicks. I get it. Does that mean homeowners renewing in 2025 won't face financial hardship? They absolutely will. But looking here in 2024, rewind back 5 years to 2019, you saw interest rates around 2.5% to 3.5%. So those renewing this year renew typically into mortgages 4.5% right about now, 6% earlier in the year, meaning that their payments jumped $600-700 on the low end, $1,200-1,400 on the high end for the average home. And yes, we did see new listings increase about 10 to 15% in many cities such as Toronto and Vancouver each month. But the number of foreclosures jumped up pretty significantly when you look at it as a percentage term. And I saw a ton of headlines saying, foreclosure listings in Toronto are up 150%. And again, that sounds like a really scary number until you kind of look beyond that, because, well, there was basically zero foreclosure listings in Toronto a couple of years ago. So every number up from there, percentage-wise, was going to be a big number. Right now, there's about 400 active bank foreclosure power sale type listings in Toronto of 24,000 listings, or 1.6% of all active listings. That to me personally doesn't sound like a massive surge or wave of distressed sellers being forced to sell their property or being foreclosed on. It absolutely impacted the market though. Those that are going to be renewing their mortgages in 2025 are coming from the lowest interest rates we've basically ever seen in Canada. Some of those mortgages were as low as 1.5%. Likely they will be renewing those interest rates at somewhere between 3.5% on the low end to 4.5-5% on the higher end, assuming we don't deviate too much from what most economists and banks are expecting interest rates to be in 2025. And that'll result in an average increase on an average mortgage for average house in Canada of about $1,000 a month, roughly similar to what we saw for those renewing in 2024. That's why I think most likely we will see a fairly similar 2025 to what we saw in 2024. That is, new listings will probably continue to be higher than normal. We will see more people have to go through foreclosures. We'll see that arrears rate go up, but there will also likely be more buyers in 2025 than there have been in 2024 to absorb some of those new listings as well. And it might help stabilize prices a little bit. So I don't think that this 1.2 million mortgages are going to renew is going to result in a much different outcome than what we've seen so far in 2024. Do you think that those renewing in 2025 will struggle with those higher payments and then have to put their house up for sale, potentially pushing prices down? Let me know in the comments below, and then check out this video right here. As always, guys, thanks very much for watching.